All right, welcome back for another episode of This Week in Charts via Carnival Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading alerts and analysis. Anyways, let's get into it this week here. So, pretty good down week on Wall Street. So last week we talked about, basically closing right below that 200 moving average. We had a small down day Monday, a minor relief bounce Tuesday, and then just really, and by the way, look at this, how they faked out. And I've talked about this. I mentioned this last week. I've traded through the 200 moving average a few times. I know how they do it. You get close to it, you bounce, and then you slice it through, close it back above one day, get everybody bullish again, and then they just whipped it down this week on pretty heavy volume here. So spiders finishing the week at 410.68. We are into a little bit of support here. If we take a look at this area, this is kind of where we broke out of in April, March, and we are getting into that. We are a little stretched here too on the downside, so I wouldn't rule out a bounce or something of that nature here. We also have a Fed meeting coming up in a few days. That will be next Wednesday. But ultimately, I've done some work on this, and I do think we're going to at least get to 405 area on the SPY. That's about 40.50 on the SPX, and you can see here, you're gonna just take a fib, and it takes you right there, right with those pivots. So that's kind of the area I've got penciled in for this mark here. That doesn't mean it'll get there Monday. Last Monday we had a small, well, it really wasn't even a bounce, but we had a pause day after the big decline Friday. And then we kind of just, rolled over later in the week. That could happen this week with the Fed. Last time the Fed paused was right here. We sold off. The previous time the Fed paused, we sold off. So that's kind of the move. If they do a hawkish pause again, that could be problematic for the market. Now, lots of things going on here this week. I want you to draw your attention to bonds right now. So we did get consumer sentiment today. That came in very hot. All the data has been hot lately, but I'm starting to see a little bit of a slowdown here in bonds, and I'm not sure if it's just maybe the market's looking ahead of the inflation data and saying, well, something is breaking here in the system, and then we're looking for a risk-off move. But take a look here at the ZB. So that's the 30-year futures. And you do have it's minor, but you do have a higher low here on the daily. Now you would say, well, big deal. It's one higher low after all this decline isn't much. But when you consider the weekly, you close green on the week versus the spiders closing red on the week. What's been the story of the last 2 years, right? Yields up, markets down. And right now we have markets basically in free fall and yields starting to come back in just a little bit. Again, there's the 30-year yield. And again, it wasn't a heavy decline for the yields this week, but it did pull back in. So that's a little bit of a divergence, a little bit of a difference there. Additionally, if we look at utilities, again, a traditional risk-off type sector here that's gotten hit with the high yield, that was green this week too. So we're seeing kind of these traditional risk-off sectors work like they traditionally should, which they've been broken essentially for the last 18 months. And maybe now we're finally starting to get to that point where things are really starting to break here. That could be a thing. Last week we talked about credit spreads. Not a huge increase this week. So again, we did uptick into last week, and we actually kind of went sideways, and now we're essentially flat. I'm doing this video Friday, so this probably won't be updated until, I don't know if they updated on Saturday, but it'll be updated by Monday morning. So we'll see what that looks like. But basically it was flat for the week. If this starts to shoot up, that's a huge problem. Like you saw that in March. That could be signaling something going on here. Additionally, I'm going to talk about regional banks in a second. Take a look here. Bank deposits here, large bank deposits coming in pretty sharply. You see Zero Hedge essentially speculating there, which small bank is going to be offered up, basically to help out JPM and the large banks. But I talked about this last week as well. This is not a good sign here. Regionals closing back below that 40 handle on that KRE. We tested it on Thursday, had a nice bounce, and then came right back in. Take a look at the weekly. So not a good look closing below all those levels. It doesn't mean it can't get a bounce here, but this is a big sign of weakness. Again, another sector we could talk about here is commercial real estate. Again, the VNQ. This is, I just don't see anything good here. I mean, this is, the weekly breakdown. Again, another weekly close below this level. I'm going to say $70, maybe 69 could be support. Looking on the monthly, we got 2 days left in the month, by the way. and your 200-month moving average, we're well below that right now. So that is not a good look here for commercial real estate. Things are, you can't hike rates this much and expect there not to be some type of a problem. Look at LQD here. You're into this double bottom, right? We're approaching. We actually did get to 98.41 was that low. Yeah, we made a new multi-decade low this week on the LQD. So, things are kind of getting close here to a possible tipping point. You're seeing, look at what gold did today, intraday, big bid. We'll talk about that later. And obviously the Middle East tension. So just kind of a perfect storm of things going on. You got interest rates running wild. Then you got Middle East tensions going on all at the same time. And the markets, and then you have a hot inflation data continuing to come in. And the the bond market right now is just trying to sniff out anything here. If you can get some type of a weaker jobs report, that would obviously help out. Or even, sometimes these geopolitical events, when they escalate, sometimes you can get a dovish Fed with that. I'm not saying that happens, but if it does escalate, that could happen. So, but right now I am seeing it does look like a little bit of a slowdown here in bonds. I do think bonds are starting to sniff things out here. And whether that's something that's risk off or whether that's just a slowdown in the economy, I am starting to see that in the charts here, starting to see some signs of seller exhaustion on those bonds. Either way, though, for the spiders here, it doesn't mean we'll go there in a straight line, but I do think we get to 405 at some point. Triple Qs here, that did actually finish up green on Friday. Amazon reporting earnings, so that did help out. They actually got a nice bid there, but it did fade for most of the day. And again, it was a down week. I've talked about this lately. You don't want to lose these on what? A weekly close. We have done that. There is a fat air pocket to 320 here. Now, that doesn't mean it'll go there in a straight line. There is going to be that 200 moving average. There's also a 382 fib retrace right at that level as well. So that will be daily support. But ultimately, I do think we filled this air pocket here down to 320. And there's your 50% fib right in that range before it's all said and done. But Triple Q is getting hit, and it does feel like there's a big tech unwind right now. So again, they piled in on the way up and they pile out on the way down. So that's what I'm looking at here. Again, there will be some support there with that 200 and that 382 around 337, 339. IWM can't get out of its own way. So again, continuing lower. We did hit my head and shoulder target this week. That was just a target, not a buy level, I think. Believe it or not, I think the IWM's got to go to 153. So that's going to be down here. Again, it doesn't mean that it'll go down in a straight line. You are into a double bottom right now, so it can get a bit off that, but ultimately I believe that is where that is headed. The Dow here got to my head and shoulder target today. So 325, we closed at 324.19. Again, not a buy level, just a downside objective. Right into 320 though, that could be a buy level. So if you look at that weekly 200 moving average right around 318, and that was your last pivot before we took off to the upside. So there should be some weekly chart support there for the Dow. But again, rough week for the stock market. Semiconductors here, managing to scratch out again. That did test its 200 moving average. I believe this is going to 129. So again, it doesn't mean it's going in a straight line, but we got weekly closes, weekly lower highs here. We closed below that. Not a good sign there, and just a massive air pocket there on the daily time frame. That was the NVIDIA Euphoria AI gap, and I think that will be filled. They did. So speaking of NVIDIA, they did close the week above that green bar, 403.11. Told you guys that was an important level, but we did trigger a weekly head and shoulders here, and we back tested the 20-week moving average earlier this week and closed below it anyway. So by the way, if that target pattern plays out to target, guess where that's going? This is why charts are so awesome. So right around 315, there's your 50-week moving average. Where's the gap? Right at 305. Not bad, right? So pretty close there. You got to think that if we get down there, we're going to get to that gap too. Maybe even overshoot it a little bit, maybe 290. Those things tend to happen. But semis coming in. Cloud software also weak. We closed the week below this pivot. I believe this has got to go to 315, maybe 305. Got a 200 moving average there as well. Dow transports here down. Just big sell off here. So again, look where we started the week and look where we ended. Big dump on the DJT all the way into that 200-week moving average. Told you guys got to go to 14,000. It shot right through that, overshot by about 500 points. It is into some support here. We'll look for a bounce, but again, transports are weak, and this is just not a good sign for the economy. Perhaps bonds is sniffing this out as well. If the transports are slowing down, what does that say about the strength of the economy, right? Does that mean we're going to be, having a slowdown? It could be. So maybe that's what the bond market is looking at. Speaking of bonds, we'll look at the yield here really quick, as we always do. So 2-year, again, falling back to 5%. By the way, the yield curve's starting to uninvert a little bit. Not fully uninverted, but it's getting there. And again, that's kind of this. That's why I keep saying this, right? The XLU, bonds, now the transports, yield curve uninverting. Everything's starting to line up here towards a slowdown. Again, it is likely going to be a stagflationary slowdown, which is the worst of it. But in either case here, 2-year pulling back in, so yield curve uninverting a little bit. 5's down to 4.76. 10-year pulling back off 5%, and the same thing with the 30-year there as well. So yields coming in this week, despite the market being down. I think the bond market is just trying to sniff something out here. XHB, I told you guys $70. That's where it went. And I think it can go probably even to 68, 68.50. So home builders here also taking a hit, but a lot of support there around 68, $69 for the XHB. But a pretty good decline there. And again, rates eventually will matter with these, as we've talked about. We already covered VNQ here. This is a dog. Leave it alone. XLF down 2% on the day. Again, I told you 32. If that doesn't hold, we go to 31.50. That's where we are today. I would avoid this one right now. It may even go down to 31, where that gap is. KRE, very weak. Again, probably wants 36. And the KBE also on the weaker side. We'll probably say 32.75 to 33 here in the near term. Again, doesn't mean it'll go in a straight line. Those are just downside objectives. XBD, broker dealers. Told you guys 450. Where did we stop? Right there. You got to bounce. So right now, this is actually holding up okay. If this puts in a pattern, it can retrace to 470, 475. If we start to take out these lows, I got about 437, 440 on this. So broker dealers coming in as well. All right, let's get over to commodities. Start off with crude as always. So crude, just kind of a sideways week, really kind of uneventful considering all the fireworks going on. You have two things going on. So again, if we have a slowdown economically, that's going to obviously put pressure on crude, but you have geopolitical problems too. So that's a tailwind. My take is crude's in a range, and I'm not doing anything with it until you either break this pivot here, then I'm going to look for a buy level down here. If we start to get above 90, then this is going to be resistance up here. It's really that simple. But I think crude's in a range right now. Big picture, it's consolidating. Trend is up. It's just trying to consolidate and digest this move. But it's hanging in there okay. I'm just leaving it alone right now. It's hard to be too bearish with it because of geopolitical stuff. I never want to get in front of that. But again, we'll just see what we get here. And I just think it's doing weekly consolidation. XLE, I told you guys to avoid that. Too volatile, and look what happened here. So big slice this week. Chevron and Exxon both doing acquisitions. And guess what? When you're in a bear market, the market is ruthless, right? So generally, these acquisitions, the market doesn't like acquisitions anyway because it doesn't like when you have to overpay. But it gets even worse when you're in. I mean, look at that. That's a slice for Chevron. This is a good company, right? I haven't even worked on levels for this just yet, but I would say at least 140 right now in the near term, and it might even go back to 127 where you broke out from. That would actually be a really good buy level. But again, taking the XLE down, this pattern's too volatile, leave it alone. XOP, pattern's too volatile, leave it alone. It'll have some short-term support around 139, 140. And then OIH here, and a sloppy pattern here, but this is called a diamond. And you got this up move, kind of like a broadening pattern, higher high and then lower highs, and coming back in. Could be a reversal, we'll see. But again, I think these energy companies are just doing weekly consolidation. But OIH backing off as well, though it was green on Friday. You guys know my thoughts on uranium. That's still hanging in there. Still doing weekly consolidation. Nothing really too new to update right now. Nat gas with a good week. We did have a contract rollover. I've been using because this is the time of year where we get those big contract moves, I've been using this adjusted natural gas chart lately. And you're going to see we came back into the 20 moving average. We got a nice bid, Shot up pretty good today, got a little overbought and came back in. I like what it's doing on the weekly. This looks really good. Up move, 1-2 pullback and a pop, no problems. It's trying to reverse that trend. If you take a fib here for targets on this thing, you really got 4 at 25% and then a 382 at 5, just above 5 there. So I really think Natcast can get up to those levels. But again, it's one day at a time there, but nice pop there for Natty. All right. I haven't covered ag in a little bit, but let's take a look at DBA. So this is still holding up really well. I know a lot of you guys don't like this, but I do like to at least look at it just for reference. But you have higher lows and higher highs. Trend is very strong here. Ag is looking really good. DBC, same thing. Kind of nice rounded bottom, nice pullback, volatile. It's got to get through 25.50. And if we can do that, it's really up to 26.75, 27. It's kind of your next level there. The potash names I am avoiding right now. I think MOS needs to go a little bit lower. I actually worked on this for members last night, and I do like it around that 25 handle. MOS and Intrepid. I think Intrepid probably got to go back to double bottom. NTR is a little bit trickier because it's a newer issue, but we'll examine that in double bottom. I go off of MOS mostly, but around that 25 handle would be a really nice buy there. But again, the potash name's still under a little bit of pressure here, but that DBC and DBA very strong here, and ag is holding up really well. Wheat got higher lows here. If this can get through 600, I think this moons. So ag and wheat and some of these softs getting kind of interesting. So getting a lot of questions about soybeans here. This one's trying to put in a bottom as well. So these soft commodities acting well. I think they're getting very interesting, and I'm definitely keeping a close eye on them. Anyways, let's get over to the dollar index. Okay, so there's our dollar chart. This actually had a nice little micro bullish pattern here this week. We broke out of that on Tuesday and then just kind of sat sideways Thursday into Friday. Still has resistance at 107 and this pivot high at 107.35. If we can close above that, especially on a weekly close, I think, believe it or not, I think the dollar can go higher, to 109, maybe 109.50. That's going to be a big problem for the market. But right now, we've got tensions in the Middle East. We've got possible, again, like I said, I think the bond market's trying to sniff out any sort of slowdown talk or anything it can get its hands on. But this market's in a very touch and go type mood, and there's not a lot of appetite for risk right now. The dollar is a flight to safety, and don't think that just because the dollar and bonds have to trade inverse. They can trade positively. They can trade up with, the dollar can trade up with gold. In fact, we're seeing a little bit of that right now, but those are levels I'm watching on the dollar. And speaking of gold, that just continues to outperform here, finishing the week at 216.30. I talked about if this consolidates, it will go higher. I didn't think that it would do that after 5 days. It is a little overbought here, so it's going up on fear, so that can happen. It does have a little resistance here at 2020. So there's your 7.5 fib coinciding with that pivot and that red breakdown bar. So that will be resistance here in the short term. We'll see what it does at that level. But gold's acting well, and it's doing what it should. It's acting as risk off, and it's acting as a fear trade and the ultimate safe haven, honestly. So gold acting well. Silver also acting well. Nice pullback pattern and a pop. That needs to get through 23.50 and 24. And then the next level is 25. Platinum, still looking for one more drop out of that. Not doing anything with it at the moment. Palladium, still waiting for that 1100 pierce, or I should say 1050 area. I think it gets there too. And then copper here, kind of a choppy week, but overall I think this is setting up for one more drop, possibly into 340, maybe even 330. And then Bitcoin here, just can't predict what this wants to do ever, right? So we had that big bid on fake news, and I told you that last week. I was like, isn't it interesting how it's holding this? It's holding the gains, even though it was quote unquote fake news. We had a lot more of that this week. Bottom line, it pumped up. I talked about this on my channel multiple times. I said, isn't it interesting how Bitcoin always seems to pump before these, the regional banks, right? It happened around the same time. And now, what was a big thing I talked to you about today in the video? The KRE, right? Big problems. So Bitcoin continues to do this. It does have resistance at 35, and that's where it stalled out. I wouldn't chase it up here. Let it give you a pullback at least 31.5 to 30,000. But yeah, big outside move here on Bitcoin. One thing I will note that for the most part, if the rest of the sector, like if you look at ETH, still lower highs, right? Doge, still lower highs. Polkadot, lower highs. XRP, Litecoin, Bitcoin miners, Riot, Marathon, MSTR, Coinbase. None of them have taken out their recent pivot high, whereas Bitcoin has. That tells me it's more of a safety play, if that's going to be the case. It's not as sector wide. Just so you guys know, and I think that makes sense, right? Because if we're talking about if we're talking about bank problems, isn't this what Bitcoin's supposed to do, right? It's also an out, right? It's a way to get move your money into something, if there's a problem, right? So maybe it's trying to tell us that. But anyways, Bitcoin into resistance. Don't chase it up here. So okay, again, back to the spiders or SPX, whichever you want to cover. Again, I do think 40.50 there for the cash S&P, and then 404, 403 for the SPY. We could get a bounce up until then, but I do think we get down there at some point. That may be a buy. It may not be a buy. It just all depends on how we get in there. Now we are getting a little stretched to the downside too, so keep that in mind. And just when things are at their worst, that's usually when the time to buy is. So always keep that in the back of your mind here too. You never want to get too bearish or too bullish in one side, but right now we do have weekly chart breakdown. Big channel there. We did slice through both of those moving averages too. So be careful in this market and respect the downside speed. We have not seen capitulation. The VIX has not even made a new high yet. If that starts really pumping up, then we start looking for a bottom. But until then, be very careful. And I think the Fed's pain tolerance is a little bit higher than most people will think, at least for now. But again, we'll see about that if and when we get there. So anyways, guys, going to wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivaltrades.com. I'll talk to you guys all next week.